Hello there, this is Robert Wolf with Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist, and welcome to our channel. If you haven't subscribed yet, go ahead and subscribe, hit the little gray bell so you get notifications of when we update and do new articles and new videos. If you like anything we have to say, give us a thumbs up. Add some comments and suggestions in the comment box. And really, this whole channel is all about you, the business owner. You, the business owner, trying to get additional information, do your due diligence, try to get somewhat of an unbiased opinion of what's going on out there. Now, my bias is to you. So when I say unbiased, I'm not going to be walking in the middle of the line. I'm here to defend and fight for you. And my goal and my job with this channel is to provide content and information that helps clarify few things. And we call them the economic termites. These economic termites are taxes, inflation, laws and regulation, time, as well as debt. And articles and information that's out there that is being told to us by the mass media or different areas that sometimes we may need to say, time out, no, that's not correct. Here's what they really mean for you as a small business owner. And today's article is an example of this. Now, you've probably already heard some information about this. It's all over the place. And actually, I hope you have. But if you haven't, more than likely it's because you're diving deep into your business. You're doing what you need to do to put food on the table, to help your employees, your clients, your customers, and all your existing relationships. So what we want to do in this article, this video, is go through and talk about the new suggestion from the current administration, talking about how the IRS really should track any transaction inflow and outflow of $600 or more from your bank accounts, personal and business. Now, they already track $10,000. It's normal. They want to make sure money laundering, all that kind of stuff is not happening. Now, they want to drop that all the way down to $600, and they're saying because they want to track the rich. Now, we're going to go through this article, and so I'm kind of putting the cart before the horse, but I doubt the rich, the millionaires, billionaires out there are really concerned about what the $600 is going to. I'm sure they're not trying to figure out how to structure inflows and outflows of revenue and payments of $600. Who's that focused on? Who's this law focused on, this change? Who are they looking at? They're looking at the average day citizen, you and I, the small business owner, the average person. $600, that's a lot of times most people's car payment if you're buying your car. If you buy your car new off the lot for 5 years, a 60-month payment, that's going to be close to $600. Daycare. There's some food bills for larger families that are $600 a month. Easy. Okay, so your mortgage payment, you get the idea. They want the IRS to track every aspect of your transactions. Okay, and is this a threat on your privacy? This is a threat on a lot of things. A lot of things, not just privacy. That's just the opening the door. Okay, and so there's a huge trust issue. Now, we've been giving some reasons why not to trust the government. Now, they're basically saying they really don't trust you and I, and they want control over that, and they're going to strangle and hold you by tracking all of your transactions. Yeah, it may go drop down to 600,000, and they may settle at 600 to 10,000 somewhere in between. Because right now it's at 10,000 for money laundering and such. So, yeah, they may drop it down to 3,000 or 5,000 or something like that. And then eventually they'll just drop it down to where they track every transaction in and out. So let me minimize this. Let's go through this article. Now, this isn't the only article out there. We just grabbed one. We made some highlights like we normally do, so you can see. Now, Biden administration wants the IRS to monitor people's bank accounts more closely. Will it catch tax cheats or invade privacy? Well, we already know that. The Biden administration proposal calls for banks to report aggregated inflows and outflows above $600. So when they say aggregated, they want a report of all the inflow transactions of $600 or more and a report of all outflows of transactions of $600 or more. Okay, so pretty much every paycheck you get, they're tracking, right? The Biden administration wants the IRS to have more information at its fingertips about the content of your personal and business bank accounts. We continue to believe this proposal jeopardizes the privacy and security of financial information for nearly every U.S. account holder. Now, the administration will argue that, and you're going to see that in here. Says John, Vice President of Tax Policy of the American Bankers Association. So the Banking Association really is not too keen on this. So we're not fighting against the banks. They don't want to do this. This is huge. Every financial institution, do you think they really want to add more tracking and do more work for them to have to try to do? They have to hire more people. They have to do more reports. They have to do more. What was the point of computers, right? You might as well just go back to everybody sitting there at a typewriter and everybody picking up phones and doing what we used to do back in the 60s and the 50s, right? So, but with this, it's going to basically cause computers to have to do all that work that we manually used to do, and this is just going to be a drain on everybody's resources, which causes the cost of our banking fees to go up, or whatever our financial institution fees to go up. They're going to offset a lot of that stuff with interest, so we're not going to get close to interest, or the interest on loans and financing is probably going to be higher. They got to pay for this stuff somehow, which is really interesting how the current administration doesn't get that. They don't get that when you make the changes that you have made, or overturn changes that you have overturned, that you're causing a glut in the system. You're causing everything to be more expensive. You're causing inflation to go up. You're causing aggravation and frustration. You're throwing rocks into a pond, and you're causing ripples and ripples and ripples. And they have no clue or understanding of that, or they do, and that's the scary thing. I would almost wish that they had no clue, no understanding of the consequences of the decision they're making. I would love to think that they're very ignorant and stupid. But I fear I am incorrect. I fear they know exactly what they're doing, and I fear for our privacy and our freedoms as business owners, that does affect our employees as well, not just us. And if the IRS can't track them, who will the administration require to track this sort of stuff? You and I as the business owners. That's why they require us to offer health insurance. That's why they require us to have insurances. That's why they require us to take taxes out of their paychecks. That's why they require us as business owners to do things with our employees. Okay? So essentially, we're the first line of defense, so to speak. Sorry, I got to digress, and I'm going to continue to do that, so I apologize. In the ongoing debate over the tax hikes for the rich and multi-trillion-dollar government spending on the social safety net, a much smaller dollar amount is catching a lot of attention. A Biden administration proposal calls for Internal Revenue Service, IRS, monitoring of people's accounts to kick in at the $600 mark. Specifically, the administration wants to require financial institutions to tell the IRS about the aggregated inflow and outflow from bank, loan, and investment accounts, according to the Treasury Department documents. The rule would apply to personal and business accounts, but it would not involve handing transaction level details over to the IRS yet. There should be the word yet there. It's like a boiling frog. You don't boil a frog. You don't put a frog in a boiling pot of water. You put them in water with cool water, and you turn on the heat, and they slowly boil and kill themselves. That's exactly what the administration is talking about doing here. The reporting would be done on an annual basis, and the threshold reporting would be $600, a level that could increase in the Capitol Hill, give and take in the idea of becoming law. So again, $10,000 to $600, somewhere in between, they'll agree on. But it's hey, okay, not 600, fine, we'll concede and let's do 3,000. No, and you can see the debate. $10,000 to $600, you can see the debate. Anywhere from 10,000 to 600 is a giving up. They're already tracking the 10,000. That's already been in place. That's already a law. That's already a rule. Okay. This proposal would create a comprehensive financial account information reporting regime, the Treasury Department said in May. Duh. Since then, people such as the Treasury Secretary Janet Yellen have defended the idea, saying, oh, it may serve as a valuable data point in the administration's quest to make sure rich taxpayers pay their full tax tab. Really? Again, do you really think it's the rich taxpayer that they're concerned about? They're already... Seriously. I just don't get this. I don't get this. And how this administration continues to point the finger at rich taxpayers. Right there, you're saying rich taxpayers, meaning they're already paying taxes. But now you want to track the other financials. So this is crazy. Sorry about this. Okay. So let's see here. Dealing with wealthy households that may have opaque or hidden income sources. Yellen on Tuesday. So if they have hidden income sources, what's tracking $600 going to do? It's still going to be hidden. Right? If it's $600 or $100,000, if it's hidden, it's hidden. I don't get that. Yellen on Tuesday told CNBC that a simple way for the IRS to get a sense of where that might be is just a few pieces of information about individuals' bank accounts. Nothing that the transaction level would violate privacy. Really? So it's just a couple pieces, just a few pieces of information. It's okay. Don't worry about it. It's going to be it's going to be a one report showing all the inflows and outflows. And it's really, notice that they don't say rich taxpayers here. They talk about individuals' bank accounts. This is a quote. Individual. Oh, so it's not rich taxpayers now. It's the individual. Okay. Natasha Sarin, the Treasury Department's Deputy Assistant Secretary hang on a second. Sorry about that. There we go. Banks already have to report the IRS when accounts accrue interest above $10. Okay? So when an account accrues enough interest that's over $10, so they're already tracking transactions of $10,000 or more, okay, inflow and outflow. But when an account accrues interest over $10, banks already report that to the IRS. Interest of $10. So what is that? Let's see. $1,000 times 0.01%. So that means an account with $1,000 earning 1% interest, which is about what savings accounts are doing right now, is going to yield a $10 report from the bank. That's $1,000. And now you want to track $600 inflows, outflows? It's not so simple, says critics who range the banking sector to privacy advocacy. They're absolutely right. The reporting requirement would be a dragnet for regular taxpayers, not a target on the rich. Exactly. I agree. The proposal for more information amassed by financial firms and gathered by the IRS might also be asking for trouble in an age of identity theft and data breaches. Absolutely, because we know that the IRS has been breached. Their technology is not up to date. They're putting millions and millions of dollars in upgrading their technology. A lot of it has to do because of these types of requests by the government, but they have been breached. So now you're requiring this to occur more. We're already at risk of our identity being stolen. I already tell my clients, hey, all your information's already public knowledge. Right? I mean, it's already, as cynical as that is, the reality is that's probably more true than not, right? While policymakers insist that provisions be aimed at high-income earners, it sweeps in almost any American with a bank account. This is bad public policy and should be rejected, according to a letter last month from the American Bankers Association and State Bankers Association to congressional leaders. Okay, so this is last month. Okay, so this is already being conversation. If the banks aren't big fans of this, nor shall we be. Why? Because banks really control our money. We know the Federal Reserve is a banking system. It's not a government institution. It's a private sector. It manages all the banks. They're completely separate from the government. Yes, they abide by regulations back and forth, that kind of stuff. But the bottom line is if they're not big fans of this, you know this is an issue. Some banks aren't just denouncing the idea with Congress, they're letting customers know about their worries too. For example, Capital City Bank, a bank with branches in Florida, Georgia, and Alabama, posted its worries on Facebook last month, saying the idea will invade consumer privacy, raise the cost of tax preparation for small businesses, and create unnecessary expensive burdens for banks. Absolutely true. The proposal's fate is far from certain. If it becomes law, the threshold may reportedly rise to 10,000 of gross flows, according to the Wall Street Journal. It's already there. It's already there. They already track that for money laundering. We've made some significant movements on the number. Rep. Rich Neal, a Democrat from Massachusetts, who chairs the Ways and Means Committee, said late last month, according to Bloomberg. Now, we've made some significant movement on the number. So they're already negotiating right there, right? They know this is all a negotiation tactic. This is a scare tactic. We're going to do 600 and we're going to settle on something where they really want to be at. Okay? And then eventually they'll drop it down to the 600 because they're closer and closer. You eat an elephant one bite at a time, right? And that's what they're doing here. An unprecedented amount of taxpayer information is being given to people. There's a link between how much information the IRS has on a person's money sources and how much the person pays in taxes according to Treasury Department officials. This is the system. We all pay taxes. We all submit our tax returns. There's already bookkeepings and accountings. If you're audited by the IRS, you have to show all your financial statements already. There's already, and I'm not against that. I'm not saying that IRS doesn't have the authority to audit. They do. It's a relationship. When we report our taxes, we're saying under perjury. If you read where you sign your taxes, under perjury, that this is a legal contract and document. You're telling the IRS all this information is true. Okay? So sometimes in relationships, we just want to verify information. No different than if you come in late from being out with the boys and your spouse or your wife or your significant other starts asking you questions. Right? How was it? They're just verifying. They're interested. They want to see what happened. Did you have a nice time? Who was there? What was talked about? Blah, 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 blah. Right? This is no different. It's a relationship, okay? And maybe we don't want to be in this relationship, but guess what? Tough. That's the way it is. You just got to understand. As business owners, you've heard us say, you've seen our videos, look, the tax code is written for you. So you have the ability to minimize your tax liability based on tax planning. That's normal. It's always been that case, okay? So if you're dissatisfied with that, then you need to seek better advice. Now, let's get back to this article. The tough and to gauge income streams come from sources like a proprietorship and a partnership income, which also happen to pop up more often with rich taxpayers. Proprietorship, sole proprietorship, Schedule C on the 1040. That's the plumber, that's the electrician, that's the person who sells on Etsy. That's all on the Schedule C. It's already the #1 audited schedule on the tax returns. So proprietorship, no. Partnership income, that's real estate, typically. That's law firms, typically. CPA firms, typically. Other service business, typically. But most of the time you see partnership incomes where investors, people with money, usually it's accredited investors, which are guidelines set out by the government saying that you understand your financial obligations and understanding and the risks to put money into this type of partnership. In return, you get money back. Those are all documented. We all get 1099s. We submit those on our 1065 partnership income or on the Schedule C, depending on how that comes across. Okay? So this is a bunch of smoke, is what this is. All right. When these opaque income sources, so they're really good at creating words to try to smokescreen things. When these opaque income sources are in the mix, the rate of non-compliance can reach an estimated 55%, she said. Really? That sounds like you're just pulling something out of thin air. For taxes based on wage and salary income, compliance with income tax liabilities is nearly perfect. 1% non-compliance rate. Really? Okay. All right. Now, you can go to the Treasury Departments, and we've done a video on this. We did a video on this on the Treasury Department, okay, and talking about the audits. And yeah, it's close to 1%, but that has nothing to do because of wage and salary income compliance. It has everything to do with the way they audit, the IRS audits. So nearly perfect. I love this. So the IRS wants more eyes in more places to spot more trends. such as large sums going in or out that might not reflect on a tax return. Large sums. So that's not even close to $600. So what is it? What is it? That general idea is already on display in proposed cryptocurrency tax reporting rules within the bipartisan infrastructure rules. The rules made it over objection, the people in the crypto industry. In that case, the people who regularly offer services executing digital assets, blah, blah, blah. The business would also need to report to the IRS on digital asset transactions of $10,000, which we already do. That's already something that in place. An average person farther down the income scale isn't who the IRS is after. But then why is the $10,000 dropped down to $600? Critics say these people would get roped in anyways. Absolutely, because they have more transactions that are closer to that level. A person making $18 an hour paying rent and living expenses would be around $60,000 in combined inflows and outflows, according to the American Bankers Association. Right there. $18 an hour. Is that a wealthy person? Is that the rich? Sure, it's above the median income level, but is that somebody who's rich? How about somebody in Orange County or LA County in California or New York County in New York or in Chicago or Seattle or Portland or some of these other large cities, Boston? Can you survive on $18 an hour? Because these are the people who are going to be roped into this. We continue to believe this proposal jeopardizes the privacy and security of financial information of nearly every account holder. I agree. American Banker Association. I agree with you guys. It would trigger an unprecedented amount of taxpayer information, most of which will be irrelevant to calculating taxable income with significant costs and data security risks to taxpayers. Absolutely correct. It's irrelevant to taxable income. This is all about tracking and oversight. This is Big Brother trying to grab onto you and take control over you. That's all this is about. The organization strongly supports tax compliance, absolutely. But there's a better way to do it using the resources information that already has. Absolutely correct, which is why the Biden administration is giving $80 billion to the IRS to upgrade softwares and hire audit teams. Okay? During the tax year of 2018, the IRS processed over 3.5 billion informational returns and documents. Can you imagine what that's going to increase to? There's only 125,000 taxpayers. Okay, give or take a few hundred or a few thousand. Okay, about 125,000 taxpayers. So 3.5 billion pieces of information processes through the IRS on those people. What do you think this law will do? This is unreal. Let's see here. There's a balancing out lawmakers have to strike. Again, negotiation, right? That's what we're talking about here. Potentially higher threshold might miss out on many accounts moving money around far from IRS views. I really doubt that. But reports from smaller value accounts aren't going to trigger audits for people with smaller net worths below 400,000. Then why track it? The idea is to use the reports over years as one building block when seeing if rich person's tax returns do or don't add up. Again, I'm not sure what they keep meaning by rich persons. Okay, we know the current administration is 400,000, 450,000 or above. Okay, that's considered. Do you really think they're trying to structure their transactions to $600 a month? I really doubt it. I mean, they don't have time for that. Why would you do that? Really? I mean, I just don't get it. Now, if you're looking for people who are doing illegal things and transactions such as drugs and that type of stuff, there's other ways to track that. Okay? But this is egregious. Let's see here. They are asking for a narrow set of information. You keep saying narrow set of information. It's pretty large. Okay? Let's see, all the worries of implementation is overblown, noting financial institutions already have to supply documents on 1099s. Absolutely. We already have to supply 1099s, which is a tax document for incomes. That's already happening. It's happening for things that are considered income. So you're saying we're overblowing it. No. You're telling the banking system, you're telling us as taxpayers that we're going to have to be providing more information above what we're already giving. Privacy worries. Another concern is the 600 inflow outflow report requirements also centers on privacy, which money sources come under microscope. For example, it's not clear if fintechs like cash apps would be covered in the rules according to Alan Butler. Other accounts and characteristics similar to the financial institution accounts will be covered under this information reporting regime. Okay, let's go to the next last page. Okay, Butler said he's not completely opposed to reporting requirements, but if he had it his way, the threshold would be higher amount just for business accounts. If a personal account had to be reported, the threshold number would be why for business accounts? We have to, maybe you require businesses to do bookkeeping. We do. If the wealthy are using accountants and bookkeepers, if you're tracking the wealthy, they're using accounting systems, softwares, people to track what's happening coming in and out. If you're looking for cash transactions, if you're looking for that sort of stuff, what you're requesting and asking for is not going to solve your issue that you're trying to accomplish here. Okay? All of our transactions as business owners are already tracked on bookkeeping. If money goes into a bank account, it's accounted for. Period. Bookkeepers, that's the job. That's the accounting software. So I don't get this. If you're going to impose a new system, further exposure of people's financial information, major reporting burden, you better justify it. Exactly. The rationale is narrowing the tax gap, but data of inflows and outflows of 600 isn't going to do that. Exactly. We're just asking for 2 additional pieces of information. Just 2 pieces of information. These 2 pieces of information are all your inflows of $600 or more. And the other piece of information is all your outflows of $600 or more. That's all. There's just those 2 pieces of information. Forget it could be hundreds and thousands of transactions, depending on the size of your business or personal transactions. But it's just 2 pieces of information. Oh, it drives me nuts. Can you tell? The Senate hearing last month with Haggerty, a Republican from Tennessee, said ProPublica stories were a serious vote of no confidence on the IRS's ability to safeguard sensitive information. What that's talking about is up here, that ProPublica obtaining tax information on high and mighty Amazon Jeff Bezos. Okay, the information was leaked. Shocking. The information's always leaked, right? Let's see here. Protecting taxpayer information is the highest priority of the Internal Revenue Service, Yellen says. I actually just cannot trust Janet Yellen. I just can't do it. The things that she says, the things that she does, she has lost all my confidence and trust in her. So I really don't believe when she says something like this, knowing that, sure, that may be the desire of the IRS, but reality is, it's been very, very clear. If it's electronic, it's up for hacking, period. We get that. I don't remember the last article talking about a group of thieves breaking into a file cabinet, stealing files out of file cabinet out of an office or a storage facility. I just don't hear that. That's nuts. I didn't hear that when that's all we did was paper files. I just didn't hear it. Didn't happen. Doesn't happen. But we hear almost on a daily basis of electronic hacks because the information's there, and it's easy for these smart people to be able to create these opportunities to go and steal your information because it's all right there, right? A reporter once asked Jesse James, hey, why do you rob banks? What was his answer? Because that's where the money's at. Hey, why do you hack information? Because that's where the information's at. Computers, servers. So I just can't trust Yellen. I'm sorry. We're talking about small amount of information. Not every transaction that's less than $600, she said, according to transcripts. Well, we know that. We're just asking for 2 additional pieces of information. All your inflows of $600, that's just 1 piece of information. And then the other thing is all your outflows of $600 or more. That's another piece of information. That's 2 pieces of information. Forget the data of transactions of what that could mean. So think about it. If your car payment is $600 a month, your rent, mortgage is $600 a month. Some cell phone bills, depending on how many people you have in your home, in your household. I have heard of some people who have cable bills that are close to that. Okay, but we won't count that. Food transactions. Okay, we're just talking personal stuff right now. Your insurance coverages for auto, home. Now, if you pay monthly, that's not going to be tracked. But if you pay annually, that'll be tracked because it'll be over $600. Okay? That's 7 transactions. Now, how often do you make a monthly payment? 12 times a year. So there's 12 transactions, just a car payment. Your mortgage payment or your rent, 12 times a year. There's 24 transactions. That's not 2 pieces of information. Now, we can go to the business side and look at the costs associated with business and the transactions that occur. That's not just 2 pieces of information. This is pages and lines, pages and pages of reporting. This is just egregious. So, I apologize for the rambling and ranting, but you get where my concern is. This is what's being talked about out there. And so, unfortunately, we have some issues that we have to abide by. And we have a fight here. It's not just business owners. It's our employees as well, right? It's every citizen. And as a business owner, you can bet that at some point this is going to be tracked to you. You're going to have to do something, some additional report, some additional accounting to track your employees, to give information. It's not going to be just taxes anymore. It's not just the 5500 form when you do retirement accounts. Okay? There's going to be more and more and more that you as a business owner, which is going to cause the cost of doing business to increase. So this is the reality. It's not going to happen right this second. There's going to be negotiation, the 600 to 10,000. There's going to be something. But we need to be aware of it because it's no longer smoke, my friends. There's a fire. Now, it may not be this enormous blazing hillside fire yet, but if that fire doesn't get under control, it will be. It will be. So thanks for your time. If you like any of this information, I'm sorry it's not positive. Hey, yeah, high five, slap on the butt, where things are great type stuff. Hopefully I'll be able to do some more information about that and articles and videos about that. But right now, hey, subscribe to this channel if you haven't already, please. Give us a thumbs up if this information, you want more of this information. This helps us. And add comments, okay? If you want us to focus in other areas, please give us information on where you want us to focus on. This is for you guys. It's not for us. We just want to be a resource and help you guys as best as we can to have access to information. All right. Thanks so much. I'm Robert Wolf with Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist.